Alright guys, good afternoon. Welcome to midday session. We're going to go and have a look at what's happened so far today. Today is the day before the Fed. Now, typically the day before the Fed, what most people are thinking, or the day of the Fed I should say, what most people are thinking is, right, steady day, not looking for too much and getting yourself fully prepped for the event coming up later, conserving energy, conserving your kind of your mental state for the day ahead. However, we have been presented with one big opportunity. A fair few people have gone for this and done reasonably well out of it. Outside of that, the amount of trades done has been relatively low. This has not been, an exceptionally heavily traded day, despite the fact that performance has actually been rather good today, simply because of these comments, and it's opening up a new market for us. Now, most of the traders have had a pretty decent morning, or a lot of them have. You also probably see a few new faces across the board as well. A few new traders coming to the office. This is always good because it provides additional perspective, new ways of seeing things, new ways of sort of interpreting information, discussions about how people go about trading certain things. So good to see in that respect. What we have started to see then is a lot of focus on trading wheat. This is something that's been growing over the last few weeks, and don't get me wrong, this is likely a narrative type scenario where people will then drift away from trading wheat in the coming weeks, months as this story dissipates. However, it's about knowing where the opportunities are. The big opportunity this morning came in wheat. Look at the performance compared to any other market. Now, the markets that you expect the performance in, the ones that were mostly traded, S&P, Bund, which are the typical ones, I'm sure you guys probably know that if you've watched any of the streams previously, that's where you'd expect the performance to come from. S&P, Bund, reasonably limited on the two, cancelling each other out. They're the most traded, so you do expect a bigger swing in terms of P&L on them, and essentially they've pretty much cancelled each other out. The next most traded market though, and equaling the S&P in fact, is wheat. Go back 6 months, you would not see a trade in wheat for a month at a time. Now you're seeing many, many more consistent trades in it, and the performance is quite stark compared to anything else. So that's where all the action has been. What was the action on? The action was on this comment. Grain corridor to resume operations. This is to allow grain to get out of the Ukraine. The Ukraine produces a huge amount of wheat and grain globally. So in enabling this transportation, and one of the people in on the negotiation around this is Erdogan, because they have proximity to the Ukraine and are trying to facilitate, and they have previously facilitated some of the attempts at peace negotiations. So commentary coming out here, grain corridor to resume operations, big drop in wheat. This is a 1 minute chart. I'll give you the perspective of this in a moment on an hourly chart and where we can potentially go from here. But a classic type move on this type of news. Significant shift that we now have the ability for wheat now to get transported out of the Ukraine, and there we go, wheat prices drop. Of course, supply then increases. This is good for the inflation perspective as well, because on headline inflation, this then should theoretically lower headline inflation. The fact that we've got more supply of food should cheapen food prices, as you see. So, classic smoking chimney type move, drop, volatile consolidation narrows out a little bit, and then you just get this steady continuation down. As would be expected, the volumes drop off. This is your sort of classic news and then steady continuation move that is pretty typical. Different traders will have different approaches to this. Some will go for the straight up smash and grab, hit it, get out. Now, for a lot of traders, if this isn't your main market, this often will be the strategy. If you're not used to how wheat trades, that's not something that you typically do trade, it's not a market that you really necessarily want to be trying to stay in and hold on to. Some traders may well look at this from a more technical perspective and say to themselves, right, this move is on and you can play for the second leg as well, which bear in mind If you can learn how to stay in for this, the initial move is matched again. So you can kind of double the size of movement here if you have the foreplanning of, or to try and play for the smoking chimney as it's coming along. So that presents that opportunity. That was the one where most people have made their money so far today. And that's what explains the sort of big jump in performance on that one. Outside of that though, not a great deal else going on, and it's about them prepping for the Fed. So in terms of where are markets now, go and look at the S&P overnight session, very, very muted, pretty small ranges. As I said on Monday, ranges are getting smaller in equity markets, so be aware of that, of the scope of movement available. Now, we've seen some very, very hefty moves on the Fed of late. Be aware of the impact of the lower volatility that you're seeing in the S&P on the potential. That said, the movement on ISM was still quite significant, particularly for an ISM move. The moves on ECB, obviously not even a Fed related move, still very big as well over the course of a good few hours though. So just bear in mind the scope of movement that is available. In terms of where we are today, for the S&P, what you do have is a situation where we're balanced on the back of what was essentially a sort of liquidation day yesterday. You had the bid up in the overnight session, we get to the cash session, the ISM data, and then the rollover comes. Basically just rolls back the overnight move. This is your full session profile, and so that's why then come the cash session, why you have all the volume down in this lower end. It is then balancing in this area from ECB trade, opening up the possibility of either way here. We either get dragged back up to where the market has ultimately been happy post ECB, looking at the cash sessions post ECB, next day balanced inside day on a cash session, we've been holding up. Yesterday's cash session does shift to slightly lower, that's in here, and gives us that big tail. If you can start getting back up into the ranges from these couple of days, up above basically 38.80, then you do have the scope for the drag back up the range. Bear in mind, if this is a liquidation move here, is there a great deal of selling likely to get in the way on the way back up? No, not necessarily. Downside, we need a bit more energy. You need a bit of a drive towards the downside to start attacking some of this move up that we got on the ECB. If you can get down through this VPOC around about 38.46, start getting through here, that's the bit that we're looking at, then you do have this drag back. On a time basis, this is an attraction. We've basically got a time double distribution. Bear in mind this is a full session, and in fact really most of the time spent down here in the overnight. So that does provide an opportunity for a drag back. Bear in mind the break of 47, you've got a very prominent ledge down here that you get once you get the main session coming in. That comes in at around about 38.15. So there is scope down. We need a bit of impetus to get that moving, and crucially you've got to get through 47 to really start to believe in that move to the downside. Onwards to wheat. Obviously not a market that I would typically be looking at, but what we've got here then is a little look at the last week or so of wheat, and really a very balanced market until you get a gap up excuse me, at the beginning of this week, or sorry, the end of last week. Gap up, we hold up, and we've seen numerous sort of comments in wheat at the moment, and then we've had this big take back. Now, you go and look at the past couple of weeks of value, we're very, very well established in this zone. This value up here is created by the additional volumes that we're getting traded over the last few days, which has shifted value up. But really, this is where wheat has been happy recently. Basically below the 855 area, and then down all the way to just below 825. So what you need to be thinking about here then is, on the back of the comments that we've had today, what are the potentials here? One, of course, we could see some rollback of this comment, some kind of blockage of any kind of transportation out of the Ukraine. That's one thing as a news, effectively denial type trade. That's one way of looking at it, and that's one opportunity. What is important from a technical perspective here is that today's move has dragged value down. That's important because this then does enable a further continuation. Arguably, looking for the full sweep of the range. So to stay below and what is creating a small flag, if you took this onto a shorter time frame, we're actually creating a sort of mini flag down here, or certainly at least a double inside bar. The break here then can give you the opportunity to trade VPOC and then sweep the entire range of the last couple of weeks down. That's something to be looking for as a potential. Once you then start to get the main session, well, we're into the main session now anyway, once you start getting the volumes picking up, do we have then the scope for this rush further towards the downside? Alternatively, you get back above 855 and then you do have this drag back up to where really value's been established for this week, which is around the 870 to 885 area. So plan out where you can go. Even if you're only going to be trading this on news, you need to know where the market potentially can go, what the scope of it is, so that if you do get any news, you're not just hitting it and wondering what to do with it. You're hitting it with an idea of where potentially we could move to, what the scope of the news is. Right. Onwards from here. Bund. Fat bottom profiles. Now, this is one that you could look at and think, oh, right, that's a B-shaped day. It's not. It's not a liquidation type day, because what happened yesterday in the Bund, as you know, we traded up and then we rolled back down in the US session. Very balanced after that, completely balanced so far today. Another market that is losing a bit of range, a bit of volatility as the days and weeks go by, and still we are well within the ECB range. What you are seeing though is a lot of volume getting accumulated down towards lows and no continuation from this. So effectively what this is showing is that even though we've tried to go up and failed, what you're not finding is enough selling to keep the move going down. As such, we need additional impetus basically to get this going. So don't assume that just because we do have a very obvious trade here, through 138.21 down to the ECB low at 137.58, and then potentially going all the way back down, this drift up into the ECB. Obviously that's going to be the first target, that little gap coming at around about 136.75. But what we need for this is more than it just getting to the level and dropping, because what we've seen so far is that you're not finding the sellers here. You find a market that can drop and then it just gets pushed back and pushed back and pushed back. That's a problem. So you need additional impetus. You need this to come at it with some pace, with some volume. Potentially the Fed is what's going to do that. So we're opening up a good opportunity towards the downside perhaps for the Bund on the Fed today. Upside, I'd be thinking about this in terms of, well, the disappointed shorts for those who are playing for this move are the ones that are going to get forced out, and if you get some kind of reversal pattern, we could then see a steady move back up range and then higher. So it's about thinking about the type of move that you're expecting as we escape this range. To the upside, I'd be looking for a bit more of a steady move. That's not going to be a move that requires too much energy. To the downside, one that really does have some punch in it. And if it doesn't, have the volume to it, then you need to be a little bit more wary of the scope of that type of movement. Just because it shows you the opportunity doesn't make this necessarily the greatest of moves. Right. Euro, similar type story. We're very pinned in the euro. We're trading within yesterday's, essentially a little bit like the Bund. We traded up, we traded down. It looks like a trend day, but it's a deceptive trend because the movement up and then back down is certainly not a trend day. So don't be misled by the profile. This essentially is a situation where we're basically filling in a sort of scrappy, broken profile. That's essentially what's going on. Like the Bund as well, volumes trapped towards lows, still not providing us with that impetus down. Again, I think going into the Fed, this is where you may well get the necessary volume coming in to actually move this. Without that, it really does look like one that might struggle to provide or to give us too much opportunity. As such, 99.75 as a peak, 99.05 as a low could well be the limits of what we're seeing so far today. Arguably, you may not even get up here, but I'd be looking at this zone up here, basically the top of value, 62 to 75 as your area where you could expect some resistance and then potential roll back. Right, what are we looking for this afternoon then? Well, as I said, most traders, and yeah, I can see the risk screen from here, very, very little by way of trade going on at the moment, sort of through the entirety of looking at through what's been going on today. We're not seeing a great deal of action from traders. This is now the time to step back, even though we, bear in mind with the earlier start to US session, we're well into the main US cash trading session, and yet still we're not seeing the sort of typical level of participation. The Fed's coming up. That's what people are waiting for. So that's the main focus now. In terms of what you are looking for, and for those joining live trading for later on, you will have seen the prep, and hopefully everyone has gone and had a little look at the prep for tonight. To give a brief summary, what it is all about is not necessarily the policy change today. And that's why I'd say it's not a big Fed meeting. It is big, all of them are big at the moment, but it's not a meeting where it's all about the policy. It potentially could be a reasonably non-event in the way that he answers certain questions, because all the focus really is on this, the guidance for December. And if he manages to get through this without really giving any clear direction, the lack of change of pricing is what's going to limit the opportunities here. So, why is December important? This is the scope for November, or this is the pricing, 90% priced for a 75 basis point hike. That pretty much nails on what's going to happen. So you're not expecting anything policy-wise, and bear in mind we don't have dots tonight either, so that takes away another opportunity. So it's all about the language or the guidance. So this is where you need to know your statement and know the key phrase around ongoing increases in rates and what potentially that could change to. And also then the focus on the press conference and questions around what are they going to do in December, because at the moment we are very evenly split between 50 and 75. Now this is contingent on 75 today. Of course, if they don't do 75 today, this doesn't really matter and everyone's going to trade this. So the question really is it 50 or is it 75? If we get an inkling towards one or the other, this pricing needs to shift, this pricing needs to shift, and so therefore that's what's going to create the movement. So make sure you're thinking about it from that perspective, the pricing going into December, and then beyond that, what more he can say about next year. Is he going to offer the idea of a slowing of pace next year and nail that down? Is he just going to keep the same line as he did last time, that at some point in the future we will need to slow the pace of hikes? So that's where a lot of the focus is going now. Working all of these scenarios out, getting your plans ready. Of course, there's going to be that ongoing bit in the background about any further wheat story, any sort of few technical trades here and there, but most of the focus now leaning very much towards the Fed. Those who are on live trading floor, I'll see you for that later on. Remember, 6 p.m, not 7 p.m. today, before anyone thinks they can grab dinner before the Fed.